In this video, I want to show a major breakout pattern starting to set up in gold. Hi, I'm Larry Gaines from PowerCycleTrading.com, and this is what we call a volatility squeeze, compression squeeze pattern, and this is on a weekly long-term chart time frame. So you can see this kind of pennant formation here starting to take place right here. You've got this descending trend line and ascending trend line here, so kind of a pennant, and these typically form to show breakouts. Now again, this is weekly, so this has potentially big impact. Now the dots show what we call a volatility compression squeeze. So this is a pattern that's coiling sideways and eventually will break out either up or down. So looking at this and expecting it higher probability to break to the upside. We've got our momentum indicators down here below, cycle 1 and 2 starting to go positive, and we've got this reversal indicator here starting to cross to the upside. So this has a really big potential upside move. Now the way that I like to trade this is using GLD, the gold ETF. Let's take a look. So here's GLD, the gold ETF, and again you can see it's also in this volatility squeeze, kind of coiling price action on a weekly time frame. So this trend line here looks like it's a high probability to get broken to the upside, and then we look for targets. So kind of the first major target will be right here to the 618 retracement coming in at 180. So we've got targets here at basically 173, 175, and then 180. So the way that we set this trade up, this is for my alert service, we did this as a call calendar diagonal. So let's take a look. Now our swing based targets are right here. So we had this break here currently today. It's starting to break on the daily, this 50% retracement. So going back here from the swing high about the 24th of Jan to swing low, we've got this 50% retracement level being broken today. Next target will be this 618 at 170.56, then 172, then 173. So what we did was we did a trade setup called a call calendar diagonal, which is a perfect situation when you have a bottoming pattern and you're not specifically sure on time, and it could take some time to maybe really turn, so you can get paid while you wait on this specific option trade setup. So let's take a look. So here's the option trade setup for the alert service. So we went out, we bought, and we did this trade today. So bought the March 11 169 call, and then sold against it the Feb 11 172 call. So this is called a calendar diagonal using a call. So our cost on the trade was $269. Spread width is $3 wide, so you're currently trading at $3. So up about $31 per spread. Now this trade has the potential to do a couple of things. We can first off just leave it alone and let it trade into, if it trades up here to this week, into our target of 172 this week on Friday the 11th. This would be about $167 or about 62% return. The other thing that we can do is if it doesn't make it to 172, we can keep the short strike premium that we received for selling the 172 against it, amortize down the long dated, and then roll up and out the short strike against it. So that's a great strategy for buying yourself time and getting paid while you wait. And for this one, we're getting paid while we wait for a breakout to the upside. So first target here, 172, 173, and then we'll see from there. Hope this helps. Good luck trading.